Ladies and gentlemen, good day, and welcome to the Q3 9-month FY22 earnings conference call of Mrs. Bectors Food Specialities Limited, hosted by Orient Capital. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, you may signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anup Bector, Managing Director and Promoter of Mrs. Bectors Food Specialities Limited. Thank you, and over to you, sir.
Yeah, thank you so much. Hello and good afternoon, everyone. Thanks for joining this call. I hope you and your family are all keeping safe, and I pray for their well-being. Amid rising cases of COVID-19, let us all continue to exercise greater caution. Today on the call, I'm joined by Mr. Praveen Goyal, Whole-time Director and CFO of the company, and Mr. Nitesh Kotia, National Sales Director for Domestic Biscuits. We have uploaded our investor deck and earnings press release on the stock exchanges and the company website. I hope everybody had an opportunity to go through the same. Overall, the consumer sentiments look strong and is also reflected on our top-line growth. Further, as COVID-related shutdowns got relaxed in the third quarter, we witnessed growth in both biscuits and bakery segments. For third quarter, overall revenues grew by 7% quarter-on-quarter and 17% year-on-year basis. During the current quarter, our domestic biscuit segment saw revenue growth in mid-single digits. We continue to penetrate existing markets as well as expand in newer geographies for our export markets, and as a result, continue to witness robust growth in revenues. We saw an improvement in our business through modern trade channels. Going forward, we will continue to focus on premiumization and consolidating our market share through brand awareness, both digitally and in retail stores through in-store branding exercises. In terms of new capex, our new biscuit line in Rajpura facility is expected to be operational in the first quarter of FY23. We are rapidly increasing and strengthening our distribution, which will help us increasing our coverage and premiumization. Now I will discuss the performance of our bakery segment. During the current quarter, our retail bread and bakery businesses saw a revenue growth in high teens when compared to last year. In terms of capacity expansion, our new line of bread and buns in Greater Noida facility was operational in the last quarter, and this will help us to further consolidate our presence in North India. The company is focused on increasing its capacity, and in this regard, we have purchased an additional piece of land in Khopoli next to our existing plant. This capacity expansion will allow us to cater to markets in Mumbai and Pune region. The company aims to cater to wide variety of retail customers by introducing new niche products such as sub bread, garlic bread, with a target to expand distribution network and increase penetration in Tier 1 and Tier 2 cities. We plan to focus more on digital marketing initiatives such as social media integration, influencer marketing, and content marketing. Our institutional bakery segment continues to see strong growth momentum in revenue. When compared to third quarter last year, During the current quarter, COVID-related shutdowns were eased across the country, and as a result, we saw robust demand from the QSR segment. We have started our brand promotions in various e-commerce channels for our biscuits and bakery products and are listed with leading e-commerce platforms in India. The company continues to focus on increasing and improving its distribution network by onboarding distributors on the DMS, the Distributor Management System. This enables our company to track real-time coverage, sales efficiencies and effectiveness, and working discipline for its distribution network. Further, DMS system also helps to increase productivity on sales team by providing access to critical information like promotion, sales trends, etc. on a real-time basis. The function of a human resource management plays an important role in assuring employee satisfaction as well as improve business productivity and performance. Considering the critical role of HR, the company has recently appointed a new HR head. Further, the company has also strengthened its sales team by making another senior level hire from a reputed FMCG company. The company is extremely focused on digital transformation and have appointed a new chief digital officer to support this initiative through smart use of digital tools, platforms, technologies, services and processes. Apart from senior level hires, the company is also looking to strengthen its operational team. The company is looking to enter into a 15-year solar power purchase agreement with Solar Stream Renewable Services to purchase part of its energy requirements for its manufacturing facility in Uttar Pradesh. The company will invest around 86 lakhs to acquire 5% equity in Solar Stream and in turn expect to save rupees 10 crores in energy costs over a span of 15 years. Now I will discuss the third quarter performance. Revenues stood at 263 crores versus 226 crores, registering a growth of 17% on year-on-year basis. Revenues from biscuit segment stood at 157 crores versus 142 crores, registering a growth of 11% on year-on-year basis. Revenues from bakery segment stood at 92 crores versus 72 crores, registering a growth of 29% on a year-on-year basis. The company continues to witness cost pressures due to increased prices in raw materials. As a result, both gross margins and EBITDA margins saw a decline. Gross margin saw a decline of 600 basis points and our EBITDA margins were 500 basis points below, respectively, and stood at 43.3% and 12.6% respectively. In order to absorb inflationary pressure, we took a price hike and are also going to do one more price hike in the coming months. These price hikes, along with focus on premiumization, will allow us to absorb rising costs and enable us to maintain our EBITDA margins at 13%. Profit after tax for the quarter stood at 16 crores versus 21 crores over last year. PAT margins for the quarter stood at 5.9%. Now coming to our 9 months performance. Revenue stood at 736 crores versus 657 crores, registering a growth of 12% on year-on-year basis. Revenues from biscuit segment have grown at 3% to 450 crores as compared to 436 crores for the same period last year. Revenues from bakery segment have increased by 32% to 244 crores as compared to 185 crores in 9 months FY21. EBITDA saw a degrowth of 13% year-on-year basis and stood at 97 crores Our EBITDA margin for 9 months FY22 was 13.2% as compared to 17% last year. Profit after tax stood at 47 crores versus 60 crores in 9 months FY21. PAT margin for 9 months FY22 was 6.4% as compared to 9.1% last year. I would like to mention the main reason for reduction in PAT as compared to last year is due to the entry tax provision reversal in the last year amounting to rupees 5.5 crores. The company has also declared an interim dividend of 1.25 per equity share for FY22. This was all from my side. With this, I would request to open the floor for questions and answers. Thank you so much.
Thank you, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who has a question at this time, please press star 1. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have the first question from the line of Percy Pathanki from IIFL. Please go ahead.
Hi, good afternoon. I just wanted to understand on the domestic biscuit segment, basically if you can give us some flavor on growth in your home territories where you have a relatively strong presence compared to the growth in the new states where you are expanding, so that we get an idea as to whether the growth is mainly led by the core territories or is it led by expansion?
Yeah, so in fact, the growth is not coming right now from the newer territories because the infrastructure for newer territories has been created. Like I also mentioned in my speech, we have appointed support for our national sales head by bringing in another support from a very leading biscuit company, especially working in Western India, where the work is now starting. So, we are going to be opening our depots and already work is happening on opening distributors. This result will be seen in the coming months. Right now, no. So whatever numbers growth has come in from our existing market and not from newer markets.
And what about territories such as UP, which is not a new market, but it's not one of your strongholds?
Yeah. So, Nitesh, would you like to take this?
Yeah, sure. So, UP currently is one of our stress markets where we have, invested in people. We have got our people, ASMs, where in the critical locations. So currently, from the growth perspective, right now it is not in line with national growth. But the way we are ramping up our distribution in the main towns, which is basically Lucknow, Kanpur, Allahabad, Gorakhpur, and Varanasi, and into the other towns of Tier 1, Tier 2. I think in the coming months, we should be able to see growth, given the fact that UP is a highly densely populated state.
Secondly, just wanted to understand your capex guidance for FY22, 23, 24. You mentioned the Khopoli plant. Any other plants you're thinking about, and what would be the capex for the entire company at rupees crore level for each of the years?
So at the moment, what we are focusing on is putting up a plant in Mumbai, where land has already been acquired and we are in possession of the land. we are seeking the necessary formalities to convert it into industrial land so that, we can take up and initiate construction. And in the meantime, we are also working on the project, the inbred, the size of the project, because the project infrastructure for this project, like what we've done in Rajpura, is going to be for much larger capacities. But initially, we will be putting up one line, which will be producing around 4,000 breads every hour. And so the investments will be worked out. I think it will take us another 1.5 months for it to go forward. This project will take around 12 to 14 months to get executed, which should be approximately, these are all ballpark figures, not confirmed figures, but around 60 crores investment. But our actual investments will come forth within a month and a half, because necessary meetings have started taking place. In fact, international visitors have started coming into India, and we hopefully would be closing this in the next one, the cost of the project in our next 1 month. And on the bread side, the biscuit side, we are fully ready for the line expansion, which is happening from the IPO proceeds. The line was expected to be installed by March, but however, it is getting into end April or May 15th that the line will get executed. The delay happened because of COVID, we had certain disruptions for a month and a half. But otherwise, these are the investments which are already being planned. And so in case right now, these are the two investments which are in line for the company.
Any quantification of the total annual capex?
See, because 40 crores is IPO funds, right? So they are already the funds are already there. And in regard to the Bombay facility, which I have already told you, which you can expect it around 60, 65, I don't know. These are numbers which are, expected numbers, but inflation, steel prices have really been, and these are lines which are made as per the building. So, these are not some lines which are just they're made to order lines. They're not lines which I can say this is the cost of the project. So I think another 1.5 months you should be able to, work out and close the investment.
Okay.
Investments, this is Mumbai is the largest investment what we are invested in.
Okay. If I look at the overall growth of the company for the 9-month period, it's a 12% YOY growth. In the last Concall, I think it was mentioned that 15% is the growth that you would target in the medium term. So what will lead to this acceleration from 12 to 15?
Actually, if we look at the last quarter growth numbers, they have been relatively different, right? Which I've already mentioned, they are approximately at a 17%. And so, going forward in the fourth quarter also, we are estimating going around 15%. So, in the 9 months, we do have a period of the first quarter where we, because of COVID, if you remember, our first quarter had actually got disrupted. So that is the reason for the 12%. Otherwise, we would stick to our 14 to 15% growth numbers going forward too. And that's what we expect coming up Q4 also.
Okay. And last question from my side for the B2C breads business. Could you give some idea of what is the percentage contribution of the non-NCR geographies today and what that number was a couple of years ago?
So it is relatively percentage number, today actually Ishan is the way, because he looks after the bread business, but I will be giving you the answer. They are showcasing their frozen products in Dubai at the food fair. But relatively, the percentage remains the same because, in fact, the outside markets percentage would have actually, as a percentage of total sales, would have fallen down only, when we compare the percentage of sales coming from Delhi NCR and from Mumbai and Bangalore. So it could have reduced because the Delhi sales are actually getting better. So, and the capacities in Mumbai and Bangalore are much smaller. And so since there are capacity constraints, once we have the new line in place, then things are going to be different. So I will give you an idea, like in Mumbai, we are targeting to make a building for 2 lines and also a sheeting line, But we will initially, the building will be for 3 lines, but initially we'll start only with 1 line. So that is the reason why, I'm not clearly able to give you the right investment, but it's going to be a very big project, a project which, Mumbai is going to take, give Mumbai a very, very good quality bread and will get us a good market position for both Mumbai and Pune markets.
Okay, that's all from me. Thanks and all the best.
Thank you. The next question is from the line of Kaustav Bubna from Rare Enterprises. Please go ahead.
Yeah, hi. So, I don't quite understand why your employee costs are so high. At least they look a little high to me versus other competitors in the listed food space. So could you just break down the amount of employees you have and the average salary, or could you also explain why these employee costs are so high?
There
14% of sales. Even when you guys were 80 to 85% capacity utilization, seems a little high to me. Could you just explain that?
Yeah. So, Sarogna, there are 2-3 things. Firstly, we 100% manufacture everything where employee cost comes under our, under the employee's expense. Whereas when you are doing a third-party manufacturing, the cost is loaded onto the other manufacturer, who is a third-party contractor. And in my side, I have a business where I do third-party for Mondelez. And also there is a difference. We have currently around 350 people on sales roles in our company. Our future plan is that we would be moving our sales, the frontline sales guys who are connected to the distributors. They will be, who are actually right now called our ADSR. They will start working under the umbrellas of our distributors. And the distributor will be responsible for their, for their salary. So what will happen is that, such a big amount of people are going to be moved out. And when you also consider the third-party manufacturing, what we undertake, so, if we put all that together, our costs are well under control.
Okay, so the CMO part is a valid reason, but I wanted to also understand as to, you guys do internal manufacturing, you all manufacture yourselves for a reason. I mean, it should flow down to margins, which it isn't. You're maximum making 6% margin in a normal, PAT margin in a normal business environment. So, any range you target in 4 or 5 years to improve these margins and reduce costs? Like, what is your plan to improve this number?
Yeah. So, the journey of a food company is never it's spread over a much longer period, and to compete with our competitors who are like Britannia, where we are talking, as our company keeps talking about premiumization. So in case today also, in the last between 1 year, in my general trade, my premiumization has increased by 5%. So my premium segment has gone up by 5% vis-a-vis the last year. Now that is a very considerable thing, Until and unless you don't have your own plant, you are not able to take care of your quality and what you would like to deliver to your customer, this percentage will never, premiumization will never come to you. Yeah, in case we want to make glucose biscuits or a cookie, which is like a 5 rupee product, yeah, very fine, you can have a third-party manufacturing happening. But yes, going forward, our targets are much beyond this. We have ample amount. Being a smaller company, being a company which is already built up its cost for a much larger growth numbers, our EBITDA margins, our PAT margins are going to be much healthier than what it is. And if you look at this year has been a year when inflation has touched numbers which we could not believe. I mean, we were not prepared for such an inflation, because for last 6-7 years we have never seen an inflation like this. Oil prices have actually gone up by 65-70%, and they keep continue to rise. So our company has worked hard on increasing its prices, on having premiumization, and giving us still a healthy margin. But going forward, yes, the company is fully geared up to improve its margins, and they shall be improved in a substantial manner.
And is it a fair understanding that you all want to, over years, move from this regional brand to a more nationally recognized brand? Is that a correct assessment?
Yeah. So this is a journey.
So fair enough. I understand it's a journey. What I wanted to understand was, what is it that you would have to do differently in terms of management decisions, in terms of strategy, to move from a regional brand to a national brand?
Yeah. So what we have done is, we were already a North Indian brand. So we got in people with an experience from Western India. So Nitesh Kotian, who's right now, he's also on the speech with us, comes from Britannia with an experience from West and South Indian markets. We have brought in another person from similar background, again who has come in from West India, because what we would like to do is, we are going to be covering 5 lakh population town, and are going to be launching our products coming into the quarters, starting from April onwards. So work has already happening. Grounds have been already selected. We are already picking up distributors. Our modern trade journey for both South and West has already started. So, all these things put together, we are fully geared up to come into larger cities, above 5 lakh population, for both South and West India. So in case you want any detail, Nitesh is here. He can probably answer your question. Yeah.
No, that's good. Just last question. What is in the investor presentation? You're talking about a new capacity in Madhya Pradesh. You didn't mention that. What is that? New capacity. This was our plan for this year, which we are still working out. This investment. We already have land over there. This investment was being done for us to start catering to the South and the Western markets, to reduce the logistic cost and create a facility over there, because we are already running at a 75 to 80% capacity utilization. And going forward, our additional capacity, we would look at getting into central part of the country. But what product is this?
Same
biscuits or bread?
No, biscuits. Indore will not be bread. So bread would be Delhi, could be Punjab, would be Bombay, so would be Bangalore, but not Indore at the moment. Yeah.
Okay, great. Thank you so much. Thanks, sir.
Yeah.
Thank you. We have the next question from the line of Kunal Shah from Carnelian Asset Advisors. Please go ahead.
Hi, thank you for the opportunity. So I'm a little confused, so pardon my ignorance. Just wanted to understand the capacity utilization levels.
Yeah, Kunal, your line is not clear. Please, in case you could speak directly into the phone.
Sure, sir. Is it audible now? Much better?
Yeah.
Yeah. So what I was saying is, I was a little confused with the capex that we are going to do and the capex that we are already doing. Right. So pardon my ignorance. Just wanting to understand, what is the capacity utilization presently in all our plants when it comes to biscuits and breads, And we have invested 62 crores on an additional line of bread and a bun line in Greater Noida City, which has already been operational since October 21. So what is the revenue potential from that facility, and what is the capacity utilization presently over there, or contribution that is presently coming from there?
Just a minute, please. In fact, let me first clarify that in case of bread, capacities what are being created are created for the region, So you cannot move bread from here to Bombay. And just a minute, please.
So, sir, basically, whenever we put up a capacity in a particular region for breads, right, say now we are going to put up this in Khopoli, okay, so the land investment would be 6 crores or whatever crores that we are going to put, right? How much is the asset turn or the revenue potential from that capex that we can do whenever we put up a bread facility?
Asset turnover of any investment what we do at 2.5 times in case of bread. But what you have to understand is that these are premium breads. We do not do mass market breads. So in the case of premium breads, our margin tend to get better, and our acceptability because of the line what we have done, what we invest on, because these are fully automatic lines. The quality of the product is so much better that we are able to get a premium from the market.
Mm-hmm.
And in case of,
okay.
Just a second, I'll tell you what the sales will be in case of, so we have one line which is a bread line in Greater Noida, and one is a bun line which has been added. If we both add together, the sales would be around 160 to 170 crores.
Sorry, sir, I missed out the number. What number?
At a full capacity, those will be additional sales. Yeah. When these both plants run at full capacity, they can give around 170 crores worth of.
Okay, and what is the present revenue that we are doing from this capacity?
At present, we are partly already using this capacity, but the bakery sales for this quarter, now this also includes my information at this time as complete information, but Kunal, I can, if you can leave your number with the Orient Capital, we can send you the details.
Sure, sir. Just basically was trying to understand, the extra revenue that we can generate from the capex that we have already done.
What we can do out of these two lines, yeah.
Sure, sir. And just wanting to understand, on the margin front, right, if I plot the numbers over the periods from, say, FY16 to FY21 and this current 9-month number, we have, always been around 11-12% kind of EBITDA margin, with help coming in from gross margin. So our cost of goods sold, which were in the range of 55 odd percent, if I leave FY17 at 58%, that has come down to 52%, which has kind of helped us, despite increase in the employee cost, right, manage our EBITDA margins in the range of 12%. If I remove the FY21 number where our margin shoot up to 16%, again helped by a gross margin improvement where cost of goods sold were 52%, right? So how should one look at, this gross margin, say, for the next 3 years, I mean, would 11% would be a normal kind of margin, 12% would be a normal kind of margin? How should one look at this particular aspect, sir?
I think what we have been targeting is, our EBITDA margins at a 14 to 15%, going forward, and that is what we feel the right margin for our business. And the gap what we are witnessing today is necessarily only because of ingredient prices. We have been able to recover some ingredient prices, but the ingredient prices kept continuing to, even because if you pick up an exercise, that exercise cannot be left behind. It has to be accomplished because that is the way the size of the biscuit, the composition of the biscuit, the pack size, everything has worked out. So going forward, we will still target ourselves at a 14 to 15% EBITDA margins, and that's where we would see ourselves comfortable at.
Yes, but that is what I'm trying to understand. That if I leave aside FY21 number, right, our breads business proportion has been increasing, which has helped, I believe, to increase our gross margins, right? Still, for FY18, 19, 20, or for that matter, even FY17, we have been in the range of 11 to 12%. So, just trying to understand that, how are we going to get 14? How are we going to get to 14 to 15% kind of margins?
In case when we are looking at previous numbers, our expansions, with the major expansions that happened in year 18-19. Okay, so once the expansions happened, then we started working on premiumization. You understand? So that is the reason that beyond 18-19 was the period when we worked on, and from 2021, and you can see a clear difference in the competition was the same. There is no difference in the competition, So the margins what we are generating for those years were actually the right margins, until unless there were certain costs because of COVID which did not get booked, and the sales were very high. So we could see I think an EBITDA margins of above 15%. But that that was the reason, because it was a COVID year with a lot of number of expenses that got not booked, and things like that. But because what we see is the gap, and where we are working on increasing our prices on the biscuit side, we feel a 14 to 15% margin going forward is the right way forward for us, and that's what our company is working forward to.
Okay. So just, sir, one last question on this particular thing only. Even with the expansion, because we are going to be in a very similar stage to what we were in FY18-19, where we are going to line up capex, right, and we have got increased employee cost because we are adding employees, which is a good thing because that will help us expand our business at the national level. Still, you are confident that we'll be able to kind of achieve 14 to 15% margin guidance, despite these two things, expansion coming up as well as the employee cost that will be built up. Is that understanding correct?
Yeah. So Kunal, over here, you have to understand. In 17-18, the investment was more than 200 crores.
Okay.
Whenever sales were, I think 760 crores or something. I'm not sure of the figure, which we can, in fact, let you know. So it was a very large investment what we had done. And this investment is only a bread plant which we are putting up in Mumbai. So there is not the fact the investment what is coming up in Rajpura will actually help us offset costs, because there is not going to be any increase in any cost which is going to be there. No managers are going to increase, no extra expenses are going to increase. So the costs are actually going to come down. And also in Khopoli, what we have done is the building what we are going to be making is next to our existing facility. So actually it helps us build, infrastructure efficiencies which are going to be coming in going forward. Because the same giving today 100 crore sale will start giving us a 200 crore sale. It is the same because it's right opposite each other. So all these efforts what we are doing today is about cutting costs, bringing in efficiencies, and that is the reason why investments are happening. So when we had built up Rajpura in 18-19, we had only one line over there. Today we have 4 lines. We are going to have 4th line coming up in the same unit. So that all this will bring in efficiencies to the system.
Correct. Okay. Fair enough. So just one last question, if I may.
Greenfield project coming up, There's nothing like that.
Sorry, sir?
There is not a very large greenfield project coming up for biscuit side.
Okay.
Sir, I would request you to return to the queue for a follow-up question.
Sure, I'll do that. Thank you.
The next question is from the line of Amit Purohit for Elara Capital. Please go ahead.
Thank you for the opportunity, sir. Just a couple of questions. One, in terms of our reach, especially in the existing markets. So when I look at your presentation, you highlighted that close to 550,000 outlets, retail touch points we have, and that was a similar number when I look back a year, and the increase has largely in the preferred outlets. So wanted to check in terms of what is the strategy in terms of within the existing markets. You think while you have elaborated your strategy in terms of expanding into the new market, but the existing markets, how do you intend to grow this number?
So Nitesh, can you please answer this?
Sure. So what we are doing is, and we had spoken about it in the last investor call also. So we have 5.5 lakh outlets, which is where our products are now selling, and we directly reach around close to 2 lakh outlets. This is the outlets where our salesmen are going and selling our products. We have a direct contact with the retailers. So our target, which we have taken, is that in the next 1 year, we will take it up to 3 lakh direct outlets, which is basically where the salesman, again I'm repeating, the salesman goes and directly sells to the retailer. And with the same ratio, I think our direct and indirect from a 5.5 lakhs, and because we are going to have a better, service, a better, reach and better frequency of service to the retailer, to move up to, estimated around 7.5 lakhs. That's what I am estimating at this point of time, both direct and indirect. How are we going to do it? As the MD sir had mentioned earlier, that we have currently 350 odd people who are right now going in the market every day to sell our products. We are increasing this headcount from 350 to 600 in the coming 600, 650 in the coming 1 year. So we are doubling our sales force, and we have identified towns, we have identified critical cities, tier 1, tier 2 towns where we are going to deploy these people, and that's how we are going to reach this particular target of 3 lakh outlets.
Okay. And second thing, just wanted to check on the premiumization point that you highlighted. So, just for my understanding, when you define premiumization, you also take into account the higher SKUs, or you just look at in terms of more of the price realization premiumization?
I think we do both because end of the day, we want to sell what the consumer wants to eat, and obviously we also want to sell where we have better margin. So it is a combination of both. So when we define our premium baskets, we are very clear that we want to play in the relevant categories where our competitions are there, and we target those SKUs. And obviously, we keep working on those SKUs where we have margin. So it's a combination of both.
Okay. So, when we say that our MT segment or channel has done extremely well, it is fair to assume that...
Modern trade?
Yeah. So that has done well, right, as per the press release. So I'm just saying, if that has done well, then probably is it the higher SKUs which would have done more contribution, or is it the product portfolio in terms of, say, creams or higher end cookies and all that?
Modern trade has done well. I'm sorry. So I'll just answer your question. So when you say modern trade is done, it's done well in both. First, we have been engaging. We are very north-centric brand. So we have been able to engage with the modern trade, accounts in terms of listing more products. Okay. We have launched value packs both in Golden Bite butter and Golden Bite cookies. We have launched a special value pack in Marie Oats digestive, and we are launching a party cracker value packs. Now all these value packs are adding obviously good margins, and there also are products which the consumers like, and we keep doing our research and R&D and getting more of these products we sold to the modern trade. That's point number one. Point number two, we obviously keep working with the modern trade accounts to do a lot of activations on certain products which are obviously premium in nature, but also are high margins. And we keep engaging during the big days of the world and during various kinds of festivals, a lot of activations, and that helps us to drive our premiumization in the modern trade.
Okay. And last question, what would be the share of modern trade, especially on either on the biscuits or bakery, if you can break it, or more important from a biscuit perspective?
So currently, honestly, we have just started our journey. It will be very small, so I would not have the exact number for modern trade with me at this point of time, but we'll definitely get back to you on the number. But we have just started our journey. In fact, I would say the real action has started in the last 6 months. So we are still a very small player, but we are very confident that we will be growing exponentially in the modern trade segment.
And you don't see any challenges in terms of, increasing this 550,000 to 7.5. Any roadblocks or challenges you see?
Challenges will be there. See, any journey, it is first of all, it's an aggressive target, but we are very confident that we will do it. Any journey will have their challenges, and obviously, when we are increasing manpower on the fleet, any new system or any new initiative will have its settling time. Now, the biggest challenge which I see is that how quickly we are able to manage that aspect and get the feet on street to be, onboarded, trained on the job, and, bring their skills to a level where you can go and, sell more products and open new outlets. Obviously, there is this settling time which will be there. I think if we are able to do it quickly in the next couple of months, then, we have a complete full year to reap the advantage of that. I think that is the biggest challenge, and we and our team are working towards getting there. Apart from that, I don't see a challenge.
Yeah. And last question more on the margin side. You indicated that overall margin, because of the price increases that the company has taken now. So we talked about somewhere, if I'm not wrong, you talked about some 13% kind of margins should be able to achieve. Which is that the correct number that I?
Yeah, 13% for this year. See, our target was 14.
Yeah.
But we will now do 13.
Sure, sir. Sure. Okay. Thanks. That's it from me.
Thank you. The next question is from the line of Alisha Mawala from Envision Capital. Please go ahead.
Hi, sir. Good evening, and thank you for taking my question. So just wanted to understand what is your current capacity utilization, because the one given in your presentation is dated March 21.
So we are, hovering around 75 to 80% capacity utilization in our business. So, that is, it moves around between 75 to 80%.
And is this the peak, or can we go up to, say, 90?
No, we can go up till 95. That doesn't hold because that's okay. Because we do have days available, because in case there is ever a need, during the season time, we can work on overtime and things like that. So that has not been counted in it, So these are primarily what is, there, but we can do beyond this, yes.
Okay. And just on the bakery side, while the exact capacity utilization you haven't shared, but is there scope for this business also to grow at 15%, because the Khopoli capacity won't come until next year, because like you mentioned, it will take.
Yeah. So this year we will grow again. Bombay will be again targeting a similar growth what we have been doing, because we have that much capacity available for our growth for this year too. So it's not there is a capacity constraint, but the volumes of Bombay are smaller. So that's why, as a percentage increase, Bombay, it is available for us. But so till the time our new capacity comes, Bombay will keep getting growth numbers in place.
And is it fair to assume that the growth can exceed 15% once the new Khopoli capacity comes on stream end of?
Oh yeah, for sure, because our aggressiveness in the Mumbai and the Pune market is restricted to the volumes what we can do. So once we have the volumes in place, we are surely going to be having two things. One is cutting down costs, and also having capacity. So we will be ramping up our sales teams and distribution, to get bigger numbers.
And any plans of moving away from digital advertising and maybe doing TV advertising or getting a brand ambassador? Is there going to be an increase in brand expense once the new?
Yeah, surely. This year has been a disturbing year, but going forward, definitely, we will do anything, like Nitesh has just mentioned, where we are adding up, our operational sales teams by double. But also what we are doing is we are very careful about increased cost. So there is no cost increase, because what we are doing is we are moving all our sales team members, operational sales team members, to third party. So which actually, cuts down our cost increases. So, we are very aggressive, and since we are also going to be opening Pan India, especially in South and West, 5 lakh towns plus, there is a possibility that, our ATL spends would be on the higher side, and yes, we would. Why we have taken up digital is it's more connected. You can connect how to make a sandwich, because what we are trying to sell to a customer is more a sub sandwich, how to make a sub at home. So that is the reason why on the bakery side, we have gone in for a digital. We have short movies, which keep playing on and helping people create their recipes.
Sure, answer. And just one last question. What is the price hike we've taken in 9 months?
See, this is a journey which, we are, I think we have approximately around 5% we have taken, a price hike. But we have a balance amount left, which we are working on. And I think another 1 or 2 months we shall be able to recover that also through cost efficiency programs and through price hikes, which will be price increase for the market and or weight reduction. But in case of bread, we have done 5 rupees per bread. I think that was for Delhi market. For Mumbai also, I think it is a similar price hike which has taken place. So in the bakery side, it's 5 rupees per bread, and I think that's an estimation. It's not exact. But on the biscuit side, again, an estimated, because different products have got different price increases. Some have been to 7%, some have also been to 3%. At some areas we are yet to, increase our prices, because we are looking at competition, how competition is behaving and things like that. So I think it will be fair to say around a 4 to 5% price hike has happened.
Sure.
So like CSD, our price hikes have yet to come, because that's a long process. It takes 6 months. So our applications have just gone in. And, because CSD is again a substantial part of our business. So that money has not come into the company. So although there are certain price hikes which are yet to happen. And but it's in the process. So we would be gaining from it going forward.
Okay, sir. And just one last, in the bakery products, are we comfortable sharing the split between consumer and institutional?
Institutional, see, I can't give you the detailed numbers, but institutional is going strong. We are back onto, business, and they're growing strong double digit. And hopefully, the QSR businesses are very positive now, and what we are getting information is, the numbers will keep growing for QSR business.
Okay, so thank you.
Thank you. The next question is from the line of Nidhi Babaria from Dalal & Broacha. Please go ahead.
Yeah. Hi, sir. Thank you for taking my question. So what type of growth are we seeing in domestic biscuit market?
See, this year, what we have got is a growth of 3%. That's what I had mentioned also. And but going forward, we are looking at about 15% growth numbers.
And that would be via distribution channel, because
This is via distribution channel increase, modern trade, distribution channel increase. And so overall, yeah, absolutely, because we are looking at like what we had mentioned earlier, our operation guys, we are increasing. Why we need to do it through our operation guys is because we would like our substantial part of our portfolio should be on the premiumization front. And, so that's the reason. And also the DMS, what we are now, because we were working on a DMS, we have now moved to get another company's DMS, which is called Field Assist, and they are installing the DMS, and that helps us to have a complete knowledge about our distributors functioning. And with distributor making now we are going to make distributors responsible for the beat, so that the success of the beat, success of the distributor depends upon the distributor itself, and so that is going to help us. Yes.
Okay. And sir, if we say that the major expansion along distribution, and if our capacity utilizations levels are high, so what exactly would help us to grow? Because our major focus in expansion is also going to be on bakery side. So I'm just trying to understand the domestic biscuit growth at 15%.
So 75% capacity utilization, we have got a 25% capacities in hand, with us. And so, and when you have to create a capacity, it doesn't take more than a year. So, we would be in process going forward to work out a plan on what is the way forward. Because adding up lines in our Rajpura facility, like what we are adding up, there is a new line coming up now also, right? Which is getting installed in April to May. End of May, it should be available to us. So that will further give us capacity. So, I think we are relatively well placed on the capacity front.
This Rajpura new facility which is coming in April, that is on biscuit side.
That is on biscuit side. So when we talk about 75 to 80% capacity, that is without that one line. So once that line comes in, that will give us more capacities for the market.
What would be the capacity for this? Like how much percentage?
That's as a percentage, I can't say, but it's approximately 1,000 tons a month.
Okay.
Yeah.
Okay. And sir, apart from that, like on raw material side, what would be our major raw materials, and how do we plan out our raw material pressure and inflation things? Because
so we are flour, sugar, oil. These three things are our major raw materials. We tend to hedge raw materials for some period, wherever we feel the markets are going to be, not in favor. There's a short supply, so we would do hedging. So it is more about market scenario. So what the market scenario tells us, we look at it and we work towards, building stocks or, taking forward blocking the raw material prices. Yes.
Okay. Okay. And
Sorry,
sir,
I would request you to return to the queue for any follow-ups.
Yeah, okay.
Thank you.
Thank you.
The next question is from the line of Digant Haria from GreenEdge Wealth. Please go ahead.
Yes, I just wanted to know this, that on the B2B bakery, like how much time does it take to pass on the inflation, to customers like McDonald's or Burger King or Subway?
So, we have an annual rate which we fix up with them in the month of April or May, depending upon when the wheat is buying. That is a major raw material for the bun. And that's the time when majority of the savings or the cost increases take place. And so rapidly for the last 3 years, we have been increasing our prices in the first quarter of the year, and which stands with it for the year, because in case of B2B, we normally fix prices of major raw materials for the year. So, then there is a lot of predictability, what is going to happen, because all the QSRs like predictability, that what is the cost for them for the year rather than on a quarterly basis. And so in the first quarter, we end up getting our inflationary price increases
Okay. Right. So in this 9 months, has there been any under recoveries? Like, are we bearing some cost because this year inflation has been more than regular? So even on the B2B bakery, are we absorbing some of the overheads which will get corrected only, like say from April of 2022, like which is 2-3 months from now?
Not really. From B2B side, yes, we did not have a price increase this year because of the COVID situation, and in the first quarter the situation was very, very bad. But we have when we looked at, because in case of buns, wheat is the major raw material, and wheat was actually quite well placed for the first 7-8 months. It's only now in the last quarter or last 5 months that the prices had increased. Not really. I mean, there is, but we keep informing them of any differentials, what they are there. But the price adjustments will happen in the next quarter. Yes.
Right. So all the margin erosion which has happened is only because of mostly from the biscuit segment, right? A large part is in the biscuit.
There are no. There has been some erosion from even the bread side. We had taken a price increase, but we would look at another price rise coming in. But what is the majority of it has come from the biscuit side, from both the export side and the domestic side. Firstly, in the export side, the shipping costs went extremely high. So those price adjustments we had to do with our large customers sitting outside, which has happened. And, some areas are in the process where we'll get it. In the domestic market also, we have been able to get around 55-60% of the cost has been recovered. 40% is yet to be recovered, which we are working on it. We are regularly having meetings, regularly working towards, seeing what are the ways we can, manage, either cutting costs within our factories or passing down the weight reductions or price rises to the market. So which is in the process, because this is something not coming to me, it is coming to every industry. Complete FMCG has suffered on this ground, and everybody is doing it. So, it is well absorbed by the market. So the market is ready for a price rise. So when you go, there is no resentment or anything. So, but it is because when the price rise happened for oil, we did it 100%, but it went up further. So we are now at a 60%. Now we need to do our second price rise, which is a very cumbersome exercise, So because it means completely changing the packaging, because all this, but it is happening. So we should be, by the first quarter, I think we should have recovered quite a bit.
Right. Okay, sir. All the best. Thank you. That's it from my side.
Thank you.
Thank you. The next question is on the line of Sun Minas from Prescient Capital. Please go ahead.
Hi, sir. This is Sonal. I wanted to understand a little bit about your credit policy in the areas, the B2C part, where you like a dominant player on the biscuit side, and then tie it up to areas which were expanding, which is the west and south, to understand what are you doing in those areas in terms of maybe differentiating the product or the credit you're leaving on the table for the dealer and the distribution channel. That's the first question.
So I'll take this question. Actually, I'm not disturbing Nitesh much because he's not well. So
sure.
What our policy for the west and the south markets is, it's going to be any new distributor appointed is on advance payment. So we would, until unless the distributor provides us with bank guarantees or something, we are not going to be giving credit. Other than that, Praveen, can you tell us on the domestic biscuit size, what is the credit right now? What is happening for domestic side?
Approximately 30 days average, sir.
That is around 30 days.
Yeah.
Okay. And a linked question there is, and
you're not clear. Can you bring the closer to your house? We can't hear you properly.
Sir, am I better now?
Yeah, you're better. Yeah.
Sure. Okay, fine. So a follow-up question I was asking on the new geographies you're expanding, because since you're a North dominant brand, just wanted to understand how the dealer, the market, and the competition has reacted to your presence in those geographies. What has been the learning in those areas, and the reason why you've not taken like a significant price rise is also because of your recency in these geographies. Just wanted to maybe hear a narrative.
No. So, Sunal, firstly, I'm going to take part of the question.
Sure.
There is no relationship with price rise. Please understand this. Okay. I can increase price rise tomorrow morning. It is the process which takes time. Okay. We have existing raw materials, laminates, which we have to finish. We have to process, get the new ones made, which takes time. So that is the reason. Otherwise, whatever price rise has been decided with our sales team, it goes ahead. There is no, like I mentioned in my earlier question, there is no resentment from the market on any price rise. Because they all understand. Everybody who sells biscuits also sells oil. He knows what is happening, to all the raw materials. He knows what inflation is. So that is not the challenge. Now coming down to the distribution system for the newer markets, I'm going to request Nitesh to take over on this. Nitesh, can you please answer the question?
Sure. I will do it. So, Sonal, the audio was not clear. So if I just summarize your question, is your question that we are a North-centric player and we have our learnings, and how the learnings are going to benefit us in Western South? Is that your question?
No, sorry, I'll repeat. Sorry, my audio is not clear. Am I audible now?
Yeah, better now. Please.
Sure. So I was just saying that in the South and the West market, since you've been there for a while now, what has been the learning in those markets, and how has your competition behaved in those markets vis-a-vis you, and like you taking shelf space from somebody? So what is it that you differentiating? I understand the product quality, but what is the value prop for the dealer distributor to actually stock your product in those areas?
Okay, got your answer. So first of all, we have not yet launched. We are in the process of launching. That is point number one. So we are opening up a depot in Bangalore, Bhiwandi, and we will open up one depot in Bangalore. We currently have one depot in Hyderabad. And that we are already speaking, we already shortlisted many parties, few parties, and the negotiation is on, and I think we should be able to set up with ASAP. Is point number one. Point number two, if I have to speak about those markets, South and West are a very high premium market in comparison to the other parts of the country. It is also a non-clutter market where you have the top three players, basically Britannia, Parle, and ITC, which takes the maximum share. And there are only few regional players, vis-a-vis North and East, which has many players, regional players which are there. So, and what we feel is our right to win in the West and South market is our basket of products which we have. Today, we have one of the best products which we have. So, in terms of cracker or your regular health or digestive. I believe that, the legacy and the experience of Mrs. Bectors Food Specialities Limited, the team which we are going to build over there, work and we are very clear. We are going to be very specifically targeting town. So that's what MD sir said, that we are going to focus only on the 5 lakh population town and launch there itself. So, so that's how we are going to, I think.
Okay, got it. Thanks a lot for this. Yeah, sure. Thank you. That's it from my side.
Thank you. The next question is from the line of Abhishek Maheshwari from Skyridge Wealth Management. Please go ahead.
Yeah, hi. Thank you for taking my questions. So my first question is regarding your new lines. So when you say that you commissioned a new biscuits line or a bread and buns line, what do you mean by, what is the capacity like? So how much does one line comprise of in terms of metric tons or million packets or something? Hello?
Just a minute. Yeah, when we are talking about a bread line, each bread line does around 60, 65, 70 crores, worth of sales. And a similar sales come from a bun line. So, on the biscuit side, it will be around 110 crores, depending on what is getting produced. So basically, what we are targeting is that when the plants are fully commissioned, for the bread plant, you will get a 2 times X turnover, and for a biscuit plant, you will get a 3 times X turnover.
Okay. So, this helps in terms of value, but in terms of volume is what I was asking. If you can quantify.
Bread side, we don't count volumes because we normally count, number of pieces, So in case of biscuits, the line what I mentioned is approximately 1,000 tons per month. And in case of buns, it goes to 24,000 buns per hour. So, very difficult for you to correlate. I think best is what value of product can be produced from those lines is more important.
Fair enough, sir. My next question is, I read your prospectus. It says that the bread and bakery EBITDA margins are like much higher than the biscuits one. So since you've commissioned the bread and bakery line, is it reasonable to expect maybe next coming half year or so, your EBITDA margin should improve because your product mix will change?
We have always been putting our margins, that EBITDA margins going forward will be 14 to 15%. This year also we had targeted a 14%, but we are helpless because of the prices, raw material prices. We have got ahead. We are still targeting a 13%. And going forward, it will be anywhere between 14 to 15% EBITDA margins.
Okay, sir. That helps. And sir, last question regarding the palm oil duty cuts. Government has cut import duties for crude palm oil, refined palm oil. Is that helping to any extent at all, or it's just going up and up?
Currently, we are unable to do any forecasting because the prices of palm oil are extremely high, and at this point of time to do any purchases, we only do purchases what are necessary to do, because we don't know. I mean, currently, it's been 6-8 months since the time the prices have been high, and for more than it's been a year continuously rising. And going forward, I'm sure prices should come down, but the present duty reduction will definitely help us a little bit, but not substantial.
Okay, sir. Thank you very much, and all the best.
Thank you.
Thank you.
Ladies and gentlemen, due to time constraint, that was the last question. I would now like to hand the conference over to Mr. Anup Bector for his closing comments.
Yeah, thank you so much. Thank you everyone for joining us. I hope we have been able to answer all your queries. In case you require any further details, you may please contact us or Orient Capital, our investor relation partners. Thank you so much. Thank you for being there with us. Thank you. Bye.
Thank you very much, members of the management. Ladies and gentlemen, on behalf of Mrs. Bectors Food Specialities Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.